A lot of traders find day trading options to be extremely challenging. Part of the reason is because of the extreme volatility in the price of the option, and it can often become detached from the price of the stock. There's a lot of moving pieces, the implied volatility, Greeks, all those things. And so for a moment, if you're into all those different kinds of things, I want you to put them aside for just a moment and to think about the price action that is actually happening on the stock. And as you are watching the price action on the stock, there's certain things that you'll be able to see that will also relate to how the implied volatility is going to move, how the Greeks are going to move. And so you don't need to even look at all those stuff. In fact, I don't look at those numbers when I'm day trading options, because all of that is represented graphically right on the chart. So I want to give you 3 ways that you could start to make more money and bank more profits in your day trading. The first is going to be to start selling when price gets extended. And the reason why is because, and I was just in a day trade the other day that did this, where you're in this trade and let's say you bought right as price broke out there, right? So on this bar, notice how fast price moved, right? So you're getting in here just about, and it ran up that much, that fast. It's the price is extended, and when price gets extended that rapidly, you want to take something off the table. Part of the reason why is because, like if you're just trading stocks, then you have that much profit, but the volatility is also incorporated into the price of the option. So when price moves that far, that fast, you're getting more profit on the option. You want to bank that, because if price starts moving sideways and all of a sudden you're over here basically at the same price of the stock, you'll see that the price of the option actually dropped, and you might be pretty close to break even, or if price had only moved up that high. So when you see those big price moves, well, when price starts to get extended, take some of that profit. Next, you want to sell at the first sign of weakness. So let's say that instead of doing this, right, like price moved up and then it's starting to move up higher, and then it starts to, you get a candle where it's closing near the bottom, or if you're a bar chart guy, I look at both. Let's say that it's closing near the low. Then that's another thing that you want to pay attention to, that and start unloading some of your position. Again, the reason why is because with options, and you have that volatility component of the option, you'll start to see the premium start to evaporate so much faster. So you want to get in the habit of selling aggressively. You'll be able to bank quite a bit of profits, and you will be able to ride some trends, but you don't want to always try to go for the home run where you're just riding that trend where it's going to go to infinity. You want to be able to be in and out of these day trades and allow part of it to run. So if let's say this one actually is continuing to move higher, right? Let's say that you're in this trade, it's breaking out, you get in as it does that, and then it starts to run higher. You sell bits and pieces. You're selling a portion of your trade on this one. You're not selling the whole thing, and then you'll be able to continue to write it up. Maybe you're taking off a little bit more right over there because you've made another multiple of what you've risked on the trade. Maybe you're selling some more up here, and you're just continuing to ride that trend. You want to scale out of these options trades. But to the first point, you want to sell if the price gets extended. To the second point, if you start to see some weakness, let's say this one closed at the bottom of its range, you would want to sell right there as well. Sell a portion. And lastly, you want to sell when price undercuts a recent low. So let's say you have that bar, and then this one has a mean reversal and starts to undercut there, don't wait for it to close. Start selling some more right there. If it's me, in many circumstances, depending where I'm at in the trade, I might take the entire position off at that point and simply wait for another setup. Part of the reason why is because I don't need to ride it all the way up. Like for me, that would be enough of a move for many of the day trades. But it's also an understanding that the market is abundant, that there's unlimited opportunity, so you'll be able to find another setup. Well, why risk this coming down further, harder, and faster when you could simply get into another trade and that has a higher probability and be earlier in the trade, so that you still have more high reward left and still have that lower risk? That's the main idea. You want a high probability, high reward to low risk setup. And if you're over here and you're like, oh, well, maybe it'll reverse, maybe it'll go back higher, that you're not in that higher probability setting. If you're up here, there's less reward left in the trade. So always put yourself in that situation where you have the potential for high probability, high reward to low risk trades. Now, if you like this video, please give it a thumbs up. If you like the video and you like what you've been seeing on this channel, subscribe to the channel. Make sure that you're getting every single update. And if you have questions on any of these, or if you have more ways that you like to sell when you are day trading options, drop them down below. This is a community, and the more that we help one another, the more that everybody can benefit. Thank you so much for watching, and I'll see you in the next video. Take care. Peace out.